Good afternoon. Welcome to my November 30th, 2023 market review. Now, very last day of the month. Hope you're having a fantastic one. Anyway, let's get right into it. So with this one, I'm actually not going to do much of a market review. I just want to show you something. I really want to get us focused on that accumulation, manipulation, and distribution cycle idea. Now, let's take a look. Let's see how that makes sense. Let's see how that changes our perspective on what we expected out of this market. So, first and foremost, we have the beginning of the week. Take a look at this. Yeah, if I can tag it. There you go. So there's really two potential opens that we should concern ourselves with, and that is the one at midnight and the one at the actual true open. So as we can see, some very exciting price action. Not very, I guess not very cash money if we're looking for lower prices, because that's actually a consolidation profile. Um, Most people that were looking for a reversal on Wednesday, and in fact, I was even looking for a reversal. I was looking for a reversal on Wednesday. However, once I saw the price action was going kind of wonky, I saw that they were doing all these kinds of weird rebalances and all those things like that, where if we were expecting price to run away to the downside, what should we get? We should get some breakaways, right? So we should get breakaway gaps, and then also this should not be like this. It should not be so up and down, crazy rebalancing, right? So the question is, what happened? What do I think happened? Well, let's take a look. Initially, I looked at this and I looked on the daily, and I saw that we had all this space open, and we could come down here and really start to work into this little area here. However, as I investigated and as price action got a little weirder and weirder and weirder, I actually looked on the weekly. Check this out. So we took a low, okay? So now this originally wasn't all that consequential. I didn't think a lot of it. And then I actually thought about it. Why would smart money take a low like that? Now, who is right there? Long-term traders, right? So there's a long-term trader here. There is long-term people here. Like, is this more than 60 days past? Is this more than 60 trading days before current day? Yeah, so there's no short term, there's no intermediate term. It's only long-term traders. So that's a lot of money, a lot of stops, a lot of capital that they first engineered here with accumulation, right? That's what accumulation is. That's putting passive orders in the marketplace. That's soaking up active orders and doing all that thing, doing all that stuff. And then we have the manipulation. Boom. What is this? That's taking all those passive orders out of the marketplace. That's sweeping them out, right? That's not the only manipulation. That's not the only thing that's not the only way that this can happen. But that's really the textbook one. That's the easiest one to see. That's the most powerful. Well, that's the most powerful one for your read because it's very hard to miss. And then we have our distribution, which we'll go over the distribution, what that actually means, what that actually is. So we can see they swept it out, blah blah blah. We came up above, and then we moved into distribution. Now, is there distribution occurring as we make this big? As we make this massive candle, is there distribution occurring? Yes, but also not really. The distribution itself doesn't really start until here. However, when we talk about distribution, basically it's a place where the algorithm kind of holds price and moves price and takes liquidity and moves liquidity from one side of the market to the other in order to unwind smart money's positions that they build down here, right? So where is the weakest, saddest, the worst average on the chart for smart money? Their absolute worst average is going to be here at this high. Okay, So during the distribution cycle, that's right, during the distribution cycle, that does not mean immediately as soon as we cross this, we start distributing and that's our distribution. That just means that during this cycle, the allowable price action, the allowable liquidity objectives, the allowable things that can happen in the marketplace can come all the way down to 44.30 and a half. Okay. So any lows that we print into the marketplace for liquidity purposes, for unwinding these, they can be put into the marketplace all the way down to 44, or the ones that go all the way down to 44.30.50 can be taken out of the marketplace for liquidity purposes. Okay. Now, let's get into the actual price action. Why this price action starts to make sense once we actually start to think about it. Okay. So we pick these up. Yeah. So we pick these up, and then we take them up here. Very, very simple. Very, very easy. So does smart money want to hold this? No, this is an intermediate term position. Why? Because overall, fundamentally, we're bearish, and as a well, not as a consequence of that, but partially as a consequence of that. But as a consequence of world events and what's going on right now, smart money does not know what's going to happen. Okay, so they don't want to hold on to anything. They don't want to be carrying a bag. They don't want to be doing anything crazy, being really offside with tons and tons of money, right? So that's not a fun time. That doesn't sound good to you, does it? Because this is their personal money, right? With your money, they'll gamble. With your money, they'll put it on the table, and they're gonna lose it and even more. But with their money, they're gonna be very careful. So basically, what they're gonna do here is they're gonna take off their position, and then they're gonna go short. Okay. So that is count them two rounds of liquidity that they got to go through. They got to cycle through it twice. Okay. What's the first one? What's the first one look like? Well, let's go ahead and look on the hourly chart. So we come up to the rejection block, okay, and we just kind of strum around. Okay. What is this? Accumulation, right? Why? Why are they doing this? Because we'll look on the weekly chart. Well, these are long-term traders, right? Let me show you. So to know that these are long-term traders and not intermediate term, let's go ahead and measure this. We want to look 60 days back, okay? So 60 days is about the limit for intermediate term traders. How far is that? It's a lot further, right? So that means two things. That means one, we have to move up to the weekly chart, and two, those are long-term traders that are in there, okay? So, long-term traders, are they just going to have a stop loss in the marketplace? Are you just going to be able to hit their stop and like take it immediately because it's just sitting there? No, that's a short-term thing, okay? Even intermediate-term traders, they're not going to have their stops in the market. They're going to be assessing, and they're going to be figuring out whether or not they want to put a stop in the marketplace, right? So if we go on the hourly chart, we can see what kind of thing we got going on here. So we kind of started strumming around. We kind of started doing our thing. From right here, we began to unwind our position. We continued to unwind, and while we are unwinding, we are signaling to these long-term traders that we're going to take their stop, right? Okay. So once these long-term traders, who are trend followers, by the way, and trend followers are, man, trend followers are going to get their faces ripped off. So trend followers, basically what they're going to do is they're going to put a buy stop. Let's say they're short here, and they're long term, so they're not going to make a decision until they see a long term high or a long term low on basically the weekly chart taken out. right? But basically, what these long-term traders are going to do is they're going to be in short right now, right? So they're going to put their position, they're going to put their protective stop up there to take them out of the market, but also they're going to put stops in there to stop them in long. Okay. So what is this? This is signaling that they should put their protective stop into the marketplace and start assessing this for a long, right? Or actually, no, they haven't started assessing this for a long. So this is just signaling to the long-term algorithms that they should put their protective stops into the marketplace. And then on Wednesday, what do? We came up, we tagged it. What's our high? 45.97, right? What is the weekly high? 45.96.75. So on the weekly chart, we actually tagged that high perfectly. Is that enough? Yes. For an algorithmic stop, that is plenty. That tagged them in. So so then from there, we just kind of did this, and we're accumulating these stops. We're picking these stops up, soaking up that liquidity, and really all this up and down movement. What is that doing? That's kind of loosening up the marketplace. That's convincing the short-term traders and the intermediate-term traders to kind of make decisions that they're not supposed to, get into the marketplace, aggregate some liquidity, and that's really what's going on right there. So this is really just unwinding the market makers' positions. So what's really the next objective that I expect to see? This one right here. Okay. That one right there. If we'll put 15, there we go. So that way you can see it. So this one right here. Normally, and I guarantee you that most people are viewing that as a breakaway gap. That's not a breakaway gap. A breakaway gap requires us to be moving and trying to get the market going, right? This particular stop run, this was not to put out the positions. No, actually, this particular stop run was to put out the position, right? But remember, we need 2 rounds of liquidity to really do the work, to actually get us short in the marketplace. So we're gonna come back up here. We're gonna kind of hoover around and kind of take liquidity out of the marketplace. And if we get enough from the short term and the intermediate term, then we're going to be able to just leave this high as it is, right? But I highly suspect that that's not going to be enough. We're not going to be getting enough. So during the morning news, let me show you. During the 8:30 news, I expect this. And during the, where are you? During the Powell speech, I expect us to actually pop out the high again. Or maybe during the news, I expect us to come back up and take this high, and then the Powell speech is going to dump us. One or the other. And the reason is because we want to get those long-term traders, and we want to really suck them back to the marketplace long, and just have them be offside. Okay. So that's really the expectation. If that was a little bit confusing, that's the kind of thing you need to hear, especially for things like this. And that's kind of stuff. That is kind of the stuff that really, at the end of the day, drives the market on these really small time frames. So usually the seasonals they're enough, but the seasonal tendencies they rely on the markets to do very consistent behaviors and very consistent activities. So normally what would happen is during October and during November, everyone would be into the marketplace, everyone would be doing the long-term thing, everyone would be ready. However, if we look at the weekly, you're going to notice that the market is kind of confused. And we're really playing chicken. We know that we have to go down. Right? We know that we have to dump it. We know that we have to drop it, and we know that these highs over here are going to be safe. However, right now we're playing the consolidation game. So consolidation, sideways motion, that means that there's no uh, up or down bias. And if there's no up or down bias, what's the long-term traders going to do? What are they going to do? They're going to beat the market up and down, right? Because they can't just sit on their hands. They can't do nothing. So they're going to have to beat the market up and down and play long-term games like this one. So that's really all I got for you. Let's just go ahead and go over the rest of the markets, just because. Nasdaq doing a lot of the same stuff. I really do expect us to come back here and tag this, right? Dow, let me show you what the Dow's doing. Dow's actually doing something really cool. It's not helpful. I don't think that this is helpful for us right now. We're gonna pop it this high. Actually, will we pop at that high? Let's see. Yeah, we will pop out this high. And we'll do it tomorrow, by the way. Then we're gonna reverse tomorrow in Dow. Dixie, let me show you. Okay, so Dixie is a very good display. Dixie really shows a very good example of what I expect to happen in the S&P. You can see here was the low. We rated it, right? We did not we didn't just kind of poke it a little bit. We didn't just kind of engineer it and then drop and poke it and then come back and do some more engineering. That's not what we did in Dixie. So we engineered. We did do engineering, by the way. That's what this is. And then we dug in and we just swept that out, right? We were very, very greedy. We just kind of took it all in one go. Okay. And we ran away from it. Of course, we accumulated it first. Then we ran away from it, right? So basically, this behavior, this is just enough for the orders to go hot. This little accumulation. So what is that? What is that about? Well, we took their stops. We took their protective stops. And then what did we do? We came back above that low, and then we came back below it, okay? Then we did a little bit. So what is that? That is activating their sell stops, right? Their actual active orders. Their actual active sell stops were activated right there, and that provided selling liquidity. So then they took that and ran with it. So that's really what I expect to happen in the S&P, and I expect to see that really probably start tomorrow. But until then, it's really going to be the wide kind of bouncing around, kind of shaking things up, keeping things loose, keeping things liquid, price action. So just be advised of that. Keep that in mind. It does like to do a lot of fast and loose things. It also likes to do a lot of proper things. So be very careful. Don't hit it too hard. If you're reading something and you don't quite know what it is, don't touch it. And oh, crypto. There you go. Don't be in crypto. Don't be looking at crypto. See that? Yeah, that means don't touch me. That means don't touch them, because they haven't gone through their thing yet. They aren't doing anything yet. So anyway, tomorrow bonds as well. Nothing interesting. Nothing particularly interesting in bonds. So it's very encouraging seeing them rise because that's going to that really falls in line with their seasonals. But not really sure what they're going to do. Not really sure really what to make of them right now. So might as well show you all of them. Oh, agriculture. I knew I forgot something. Yeah, there you go. Congratulations. Hmm. Take a look at the daily. So you see, you got another on ramp in the Coco. Only on the 4 hour though, no higher. So let's look at our energies. Oh, I had to cut the oil, by the way. So let me show you the oil. I had to cut this one for risk assessment reasons. Um, Now this, I don't know what it's doing. I actually think it's accumulating. Um, so very very strong, very very bullish sign. However, for the weekly range idea and for weekly range purposes, I had to cut it because it's not. Um, Although it's decent, it's not terrible. It's not a bad thing long term to see this. It's not very good for short term, which in the ETFs we're short term, right? So yeah, we have to follow short term rules and we have to not touch this. So yeah, that's a pain. Let's take a look at gold, by the way. Is that interesting to anyone? Because honestly, I don't care about that. We did have, yeah. So we did shoot off seasonally. So now that we're off to the races, we should keep going. Dang, those guys are working late. Man, they should get a raise. But or overtime or something, man. But so for the gold, we can see that it's doing its seasonal, but at the same time, I don't trust it. The reason that I don't trust it is because of those world events that I was telling you about. Um, Although everything's falling apart, the Fugazi, the posturing, everything, it's all falling apart. Um, so that's probably why the Dixie is dropping so aggressively, is because nobody's afraid to drop it anymore. Um, so if you're not afraid to drop the U.S. dollar, why are you going to hold on to it? So that's probably what's going on, and it's probably the same thing going on in the gold. Um, Gold is really it's manipulated with the U.S. dollar. So if nobody's afraid to drop the U.S. dollar, then it's just going to shoot off and it's going to show true value, right? So it will show its true value, right? So it's kind of a big deal. Anyway, those are the markets. We'll go over them. We will go over them more precisely tomorrow, and I'll go ahead and give you the power of three idea. Now, it's not the usual power of three idea. Um, you'll notice when I said manipulation, or I'm sorry, when I said accumulation, manipulation, and distribution, um, I did show you price structures, but I didn't refer to any price structures. That's because they don't really have anything to do with price structure. They are conditions. Um, well, they're not quite conditions, but they are activities that are facilitated, that are allowed for, that are optimized for in the marketplace. So really, that's it. It has nothing to do with the charts, and in fact, there are no set chart features except for distribution. Distribution is a special one. Um, but accumulation and manipulation, they don't really have any. They don't really have. What's that word? There is no set um, way that they should carry. There's not really a set parameter, I guess. Well, there is a set parameter, but there's not really a set way that they occur. It's just they occur, and you kind of have to see it. So that's what I'm going to work. That's what I want to show you guys, and I kind of want to get you guys proficient in that, and from and wean you guys off of the chart features themselves and into the actual ideas and the actual practices that go on inside the marketplace. So well, we'll try to do that. We'll try to figure that out. Man, ICT has its candlesticks, which it shows you, which I love the candlesticks, dude. The 7PD arrays. When I heard about them, when I saw how they worked in the charts, I was like, man, I was blown away. Um, then there was another guy who was of his description of his type as a trader, who he was really into volume profiles. He loved volume profiles. He thought they were awesome, and that were the coolest thing in the world. And then there was another who basically introduced me to this type of trading, this class of trading, and he was really into waves, and he would actually use, um, man, this guy had, it feels like it was a clown, but he would beat the chart all up and down, using a tick chart and his watch, and that guy was crazy, man. Nothing that came out of his mouth, nothing that I didn't understand anything. All that he really taught me that I understood, like for real, was that was the market clock and the one tick drill and the three tick drill, and those were about it. Everything else, it was just so spread out. It was so all over the place. It was so crazy. He could make it work, but I don't really think anyone else can. Anyway, thank you for your time, and good night.